Hello, ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex technical analysis. We're going to take a look at the dollar versus Swiss. Failed. It had a chance to move higher this week. It didn't. It started to come down. What do I mean? Let's take a look at I'm going to start off with the daily chart here. And if we take a look at the daily chart, you see this yellow area? This yellow area comes at 95.31 to 52. And that's where the market peaked in trading this week. Now, let's go back a little bit in time here and look at the November swing low here and the December swing low. This were pretty much this double bottom here, the market moved higher. That's where we get this yellow area from. So moving back forward to where we are here today, that's where the price, or this week, that's where the price stalled. So, and during that move to the upside, we also moved above the 100-day moving average and the 200-day moving average for the first time in a month, going back to these times right here. And so the market had this chance to move higher, for the dollar to take the dollar strength to move that dollar Swiss to the upside. Failed up there, and the market started to rotate back to the downside. Now, is that the end of this correction move? This correction move that's seen the price come down from the March high here at the 10126 level down to our low price that we saw here in the month of May at 90.70. I'm not sure, but it certainly put a cap on the price at the moment. What we do know is that next week we're going to have to get back above this broken trend line. We're going to have to get back above the 100-day moving average at the 94.61 level in order to push this price back to the upside. So that with the market trading kind of in between the range here today today after bouncing off the lows, it's not all done necessarily for the upside, but we are going to need to get above that 94.61 level if we're going to move higher, right? Right, makes sense, right? On the hourly chart, in our move to the downside today, we broke below this nice little trend line here, and we saw the market move quickly to the downside. We did find support around the 38.2% region and started to move back to the upside fairly quickly. So it was only one bar closed below that trend line, the next bar back above that trend line. So we'll discount this line right here, and in next week's trading, we're going to be looking at the 93.88 level and move below that level, opens up the door for further downside. Here's our 100-day moving average. Here's our trend line right here, kind of in between those two levels. Those are going to be our risk-defining levels in the early part of next week to see which way we go for this currency pair. If we move further to the downside, watch 50%, watch the 61.8% retracement where we have this old swing high and this old little swing low before moving higher. Those two levels will be key. On the top side, move above the 100-day moving average and this top side trend line. We're going to be looking back up toward that 200-day moving average on the top side, that moving average that we failed at earlier this week. My name is Greg Michalowski for ForexLive.com. This has been a look at the dollar versus Swiss. Have a great weekend and good fortune with your trading. Bye-bye now.